Hello, this is video 4 in chapter Dissolution of a Firm, ISC board. Now in this video 4, we are learning the entries to be passed relating to partners loan account, which is appearing only and only on the liability side. So if a partner gives a loan to the business and it is appearing in the balance sheet on the liability side, we need to also pay that loan because it's a liability for the business. So in that case, there could be three scenarios. One is that the loan is settled in cash. The second scenario could be that the partner's loan is settled by giving him an asset. And the third scenario could be that the loan is paid, but it is settled. It is not settled. So the word settlement is missing. So in the three scenarios, what are you supposed to do? So in the first scenario, when the partner's loan account is settled by giving cash, then you have three situations. The situations are that when the same amount is given to him as his loan account. So say suppose his loan account was 10,000 and we settle him also by giving 10,000. So money is going out by 10,000. So bank or cash will be credited by 10,000 and his loan account will reduce by 10,000. So partner's loan account debit by 10,000. The second situation could be when the amount that is given to the partner is more than his loan account. So in that case, say suppose his loan was 10,000 but we are giving him 15,000. So this means we are giving him more than what was the liability. Okay, so we are giving him 15,000 but his loan was only 10,000. So we are giving him 5,000 more. This 5,000 more that we are giving him is in the form of interest. So now we will pass the entry. The entry for interest, which we also learned in realization account, was realization will be debit and loan account will be credit by 5,000 because that's the amount of interest. And then when we will settle him, we are paying him 15,000. So money is going out by 15,000 and loan is getting reduced by 15,000. The third situation is when we are giving him only 8,000 against a loan of 10,000. So we are paying him 2,000 less. So this was also shown in realization as claim given up. So loan is debited and realization is credited with 2,000 for the claim that is given up. Now we will pass the entry for the amount that we settled in cash. So loan account will be debit and bank or cash will be credit by 8,000 because 8,000 is what is going out of the business. I hope it is clear. Then we come to the second scenario when you are settling the loan account and you are settling it by giving an asset. The word settled is given in the question. So suppose now when you will solve these journal entries, you have to compare the realized value of the asset with the loan amount, not the book value. Always check for realized value. Okay, if realized value is missing, then realized value is same as book value. But if realized value and book value are different, you compare realized value and the loan amount. So if the partner is settled by giving an asset, the word settled is given in the question, then you compare the realized value and the loan amount. If the realized value and the loan amount are the same, then in that case you transfer this in realization account as partner's loan account will be debit and realization will be credit with 10,000. If the realized value is more than the loan amount, first of all you show in realization as loan account debit to realization, but now it is 12,000 because that's the value of the asset realized. And 2,000 which you are giving him extra, that much money will get back from the loan account. So cash or bank debit and partner's loan account will be credited. This money you will get back from the partner when the firm closes. If you are settling him a asset which is less than the loan amount, so first you will pass the entry for the asset that you have given him by crediting realization and debiting the partner's loan account. And for the claim that you have given up as a partner, you will pass the entry loan account debit to realization. The third scenario is when the word settled is not giving, but you're still giving him an asset against his loan. Okay, so again you are comparing the realized value with the loan amount. If the realized value of the realized value of the asset is equal to the loan amount, then you just record it in realization as partner's loan account debit to realization. If realized value is more than the loan amount, then also you transfer partner's loan account debit to realization. Suppose realized value is 15,000, you pass this entry with 15,000, and the 5,000 that you have paid him extra, you will recover it from his loan account, for which you pass the entry bank debit to partner's loan account. And the last scenario is when the realized value of the asset that he has accepted is less than the loan amount. First you pass the entry for the asset that he has accepted. So realization will be credit, loan will be debit by the value of the asset accepted, which is 9,000. For the amount which is still pending, we are going to pay him. So money is going out, so to cash or bank, and loan account will be debited.